Corporate reforms in Japan are progressing apace. In the last 2 weeks, the Financial Services Agency, the FSA, has just come out with guidelines for companies to unwind their cross-shareholdings, and this will create an opportunity for the change in control of companies in Japan by private equity, by strategic buyers, and shareholders will be the beneficiaries. We are incredibly optimistic and extremely pleased that the government in Japan, throughout the bureaucracies, are pushing management and boards to reflect the values of the companies that they've been sitting on for years. We engage with companies by sending the holiday letter, we call it. This is a letter that perhaps some of your families may have sent to their friends in the past. My wife sends out our holiday letter in December with pictures of our grandchildren and our dog. We send holiday letters to all of the companies in our portfolio, and we ask for 3 main things. Number 1, we ask for corporations to issue restricted stock, what are called stock options in the United States, to all of the board members and senior management to align their interests with ours as shareholders. Item number 2, we ask for the board of directors to announce a 10% share buyback. This will benefit all the remaining shareholders who don't need to get cash today. Item number 3, we ask for all boards of directors to add at least 1 woman to the board, and we ask the board of directors to increase the number of independent board members to over 50%. 10 years ago, Japan had almost no independent board members, and certainly not a female. So it's our job to improve ESG and corporate governance in Japan. So the government in Japan, realizing that many Japanese individuals have not put as much money as they had expected into their NISA accounts, has doubled the amount of deductions that individuals can take, therefore doubling the size that you can put away every year into your NISA account. Now in the UK you have ISAs, in the US we have SEP IRAs or IRAs. These are wonderfully flexible retirement accounts that you can invest any way you want. So the Japanese government, I believe, expected that Japanese investors would start investing in the equity market, which provides a much higher return potentially than the Japanese government bond, which offers about 75 basis points a year in return. But after visiting Japan in the last couple of weeks and talking to my friends in the brokerage industry, I heard that Japanese investors are really investing in the United States market through the NASDAQ and the S&P ETFs. This was a bit of a shock to me. What it tells me also is that there is an enormous opportunity coming down the line when the Japanese realize what is right in front of them. Their own stock market is offering such an incredible return. We think there will be an increase in interest rates in Japan and therefore a normalization of monetary policy, specifically because the recent negotiations between industry and worker unions have been very positive for the workers. We see 5 to 7% wage increases across the board in many industries, which over time will put pressure on the Bank of Japan to raise rates. You have to remember, interest rates in Japan are still negative, the only place in the world where they are negative. So normalization of interest rates in Japan might mean that they go to 0 or they go to a positive 1%. Nonetheless, these things will change the value of the yen in relation to the pound, the euro, the dollar, in our opinion, to the benefit of those who own Japanese stocks and Japanese currency in general.